Before watching this video, please take a minute to read and understand our disclaimer. If you do not agree to this disclaimer, please close this video.
What's going on, everybody? How are we all on this fine Monday evening? Guys, the market is pumping. Altcoins are looking juicy. Can I ask, are we all making some money right now? I see a thumbs up. I can see a few people nodding their heads. It's almost getting to that time of the market where it's almost like shitcoin bingo, isn't it? It doesn't matter what you buy at the moment. Things are just going up. And I just wanted to say, just especially to Luke Dolly, actually, and Corey, because I know that this is their first alt market. And I've been telling them since they first got into crypto about a year ago, I'm like, just wait, stay in the game and just wait until the bull market starts, because it doesn't matter. Oh, it does matter what you buy, but it'll come to a time where there's a whole bunch of coins just explode. So Luke, Michael, Corey, you guys that have been here since, you've never seen a bull run, congratulations, you're here. You're here. We're going to go through that today. I'm going to go through what we're looking at, a whole bunch of coins to be keeping our eyes on. But guys, now is the time that we all need to be hyper-focused on the markets. And that, if that means putting in some extra late hours, whatever it may be, what we're going to see in this bull market could revolutionize all of your lives forever. Like, there's a term we like to say in the crypto world, and it's, we could all be making some life-changing money. For some of us, it may be life-changing money. But we have to find out what we need to buy and how we're going to do that. And as always, guys, on these calls, feel free to unmute your mics whenever you've got a question or anything, and we'll get through it all. So I have got a shitload of tabs open today. We're going to have to get through them all, so we might go a little bit over an hour, but I want to give you guys value. So if we go a little bit over an hour, sorry, the more I can give you, the better. So first off, let's take a look at Bitcoin itself. Now, remember last week, we spoke a little bit about Wyckoff, right? And I just wanted to bring this up. I'm just going to hide this indicator for a second. We spoke a little bit about Wyckoff strategy and how price comes down and we get what's called a spring. So there's two different types of Wyckoffs. There is a accumulation, and then there is a distribution. Let me just bring it up here because I accidentally closed this before as I was going through all my tabs. This is an example of a accumulation. And what happens in an accumulation is the institutions will test how much buying and selling pressure there is to see if they can eventually push that price up. It's basically like a test, right? But they use this to manipulate the price and to load in at lower prices. What I want you guys to take notice of is this part here. We call that the spring. And what the spring is when price dips below the level of support and then comes back up into the support. Can everyone see it?
You're not sharing the screen, mate.
Oh, sorry, guys. My bad. Here we go. Can everyone see that now?
That's him.
To take notice of is the spring, what we have here. Now, remember that in an accumulation, you usually see this on a downtrend. So you see price coming down, they accumulate, they then push it up, and then it comes to a level which is called distribution. And basically with distribution, you see the spring on the resistance side. Okay, so it's on the other side. What we're seeing right now, what I think we may be seeing anyway, is what we call a re-accumulation. And this is when price is going up, it's going sideways, and the same pattern is playing out, basically showing you that they're accumulating more and more, okay? So let's just have a look at the chart, and let's see if we can match this up. And what you can see here is here was our level of support. We broke down, we bounced straight back off that trend line, and we continued to head up. And what we look like we're building now is somewhat of a ascending triangle. Now, for this accumulation to play out, and if it is an accumulation, what we want to see is price breaking up, and usually, depending on how bullish the market is, which right now it's stupidly bullish, we usually want to see price kind of fluctuate here for a little bit and then go up. So it'll break out of that resistance, it might test it for a little bit, slight bit of range trading, and then we usually see the price head up. And if we're looking at where our next target is, we're going to get to it in a second, but essentially there is no resistance, or there's very minimal resistance all the way to the all-time high. So we are in a bloody exciting time right now. However, remember that there's always two sides to the narrative, and you don't always want to be biased. That's one of the biggest things as a crypto trader that you're going to have to learn, is not to be based on one side. You do have to sit there and analyze what could happen in both directions and say, well, if we do happen to reject here and we don't break above, then we could start to see a bit of a drop where, we could come back down to the $50,000 level back down here. So that's just a really quick recap on Bitcoin. But I want to get into some of the fundamentals. And basically, I want to recap on last week. So we talk a lot about the US economy on this call because we know that the US economy is directly correlated to Bitcoin, all right? And what we spoke about last week was we have the inflation numbers. And we can see that inflation numbers actually came back a lot higher last week than what we expected. Now, this is a bad thing for the US dollar. So for a while now, you guys have probably seen it on the news as well, or, wherever, that governments around the world, they want to be lowering their interest rates. But when inflation is high, they have to raise their interest rates to basically stop the inflation. Now, the US were predicting to lower their interest rates this year to relieve stress on all the businesses. Problem is that inflation is still high. So they weren't able to lower the interest rates before. The next meeting coming up, I think it's in May, I doubt they're going to be able to lower interest rates again. It's probably going to stay at the same level, which is high at the moment. And if inflation continues to go up, well, we're just going to see it just get worse and worse and worse, because you've got to think a lot of companies out there are leveraged to the tits right now, and they're basically sitting there thinking, well, is interest rates going to go down? They're being sold a dream. Who's seen on Australian news, or what I've seen on Facebook, that they're saying that they're going to predict interest rate cuts this year? Can I see a show of hands? Anyone heard that as well? No one? No. Okay, maybe some of you. Well, these are the kind of things that we need to look at in order to predict that. Now, inflation came up higher, which is bad for interest rates. And basically, if we have a look, where are we? If we have a look, the sales numbers, here we have the core retail sales, they came down. Why am I telling you this? Inflation's going up, meaning things are costing more. Therefore, sales are going down because people have less money. What's it mean when people have less money and spending is less? We get to a recession. Okay? Now, this is important that we need to consider this, because could a recession happen, what we may see is a black swan event in Bitcoin. Who's ever seen or heard of a black swan event? Let me see a show of hands. Okay, black swan is essentially a market move that shocks everybody. It's like it's not as expected, and it tends to be, in most cases, can be quite a large move, which swings the market. So remember that right now we're also bullish, and technically the US dollar going to zero, if it does, whatever, if it drops, that's still very bullish for Bitcoin, because it means it will have a higher price in US dollar. So just something to consider. Coming on to this week, we don't have many important meetings. We've got something here on Thursday with FOMC meeting. They're going to be discussing interest rates and the economy. So we may see a bit of a market shakeup around Thursday. And then we have unemployment claims and the flash manufacturing. So Thursday and Friday, they're the days that you want to be, maybe just write these times down, or go to the Forex Factory website, have a look at what it is in your country, so you can get a good time on when to set an alert to basically just keep an eye on the market. But from what we're going to be hearing, I think, is that when we discuss the FOMC, they're going to be talking about how rates may not be coming down as soon as what they thought. So let's talk a little bit about the US. And for the whole year that Empire's been around, coming up to a year now, I'm telling you guys, I've been telling you all that the US is on a dangerous path, and they may, things are going to start to get quite scary. Now, right, they've kind of hidden that fact for so long, right? They've kind of put it to bed. They've kind of hidden it because they didn't want everyone to know. But now we have the bloke in charge of the FOMC, Jerome Powell, turn around and actually admit the fact that the US is on an unsustainable fiscal path. So that's like the first big warning sign, because they can bullshit you as long as they can to keep the markets safe, right? But when the markets are at a point where it gets very, very dangerous, they're going to turn around. If he's come and admitted this means that they're somewhat in trouble right now. They are in trouble. And let's go further into that. So US companies are opting to refinance their 2024 debt. Debt face profit hit as higher rates bite. So right now, a lot of companies, non-financial companies in the S&P 500, have a combined $107.7 billion in debt, which is coming due this year, with an average interest rate of 2.8%. A lot of them are going to be looking at refinancing, but look at the rate that they're going to be refinancing at 5.44%. That is a huge difference, and that could cause a lot of companies to go into a bit of stress, right? Now, the issue with this is, one, either products are going to get more expensive because they need to pass those costs on to the products, or the companies might start to downsize, take a loss. You're probably going to see some companies collapse. Now, the thing with that is Bitcoin is quite correlated to the S&P 500. How many times have you heard Matty Steller talking about it? When the S&P 500 is doing well, you see that Bitcoin tends to do well, right? What happens when this happens? Are we going to see Bitcoin still correlated to the S&P 500? Or are we going to see Bitcoin go on its own path and lose its correlation? Okay, so that's something that we need to be keeping our eyes on, and we're going to be giving you guys updates on that throughout the year. Next thing is the director's statement. This comes straight from the Congressional Budget Office of the US government, okay? In the projections released today, this was released on February the 7th, the deficit grows from 1.6 trillion in 2024 to 2.6 trillion in 2034. Basically, what they're expecting to do is potentially borrow another $1.6 trillion in 2024. Now, if you look at what that looks like on a 5.44% interest rate, well, they're going to be paying back a lot of interest. And we can see that we started talking about this debt at like 28 trillion. It's already escalated all the way to like 34 trillion. So it's absolutely exploding. Imagine another 1.6 on top of that, plus the interest rates, which they're trying to push down, but they can't because their inflation is so high. Can you see where this is going? Inflation is skyrocketing and they're trying to lower rates, but they can't. And then they're having to pay back a higher rate on their own debt in the US. This is causing a lot of dramas for the US. I would not be too happy to be holding US dollars right now. That's me personally. A record $8.9 trillion of government debt will mature over the next year. See the chart below. The government deficit is looking at will be $1.4 trillion. So what the deficit means is the amount that they're paying minus the amount that they're bringing in. So they're currently running at a $1.4 trillion a year loss. So that is a lot of money, right? Most countries are running in a bit of a deficit, but this is like an extreme one now, right? So one important thing is the bottom line is someone will need to buy $10 trillion of US government bonds in 2024, okay? Now, if you guys have been on my call, you'd know that we've been also talking about how the foreign ownership of US government bonds is currently dumping. Look at that. It was at 35%. It's come down to 20%. Other countries around the world are seeing what's happening. So this could bring the US economy closer and closer to a default. If they can't go and pull $10 trillion of bonds, what are they going to do? They'll have to print the money to make it up. If they print the money, what does that do? It deflates the dollar. If the dollar gets deflated, it's going to happen to Bitcoin, guys. We're going to be hopefully not a bad spot at all. This could be the big boom that's coming. But the thing is, this is the data. Okay, now I can only tell you what the data is telling me. Now remember that for months they've tried to make the economy in the US look like it's all strong, it's all sound, it's all good. But looking further and deeper into the data, I want to see in the chat. After what I've showed you today, does it look like shit's about to collapse or what? Like, it doesn't look strong, yeah? And us as traders, well, we need to make the most of this. We're seeing all of this happening, all this playing out, and we need to say, okay, how do we capitalize on it? And that's where, obviously, we're interested in the crypto market. Now, BRICS US allies are downsizing their dollar in central banks. So what you're seeing is even the US allies now are starting to lower their holdings of US dollars in their banks because they also see that the risk level is obviously increasing and therefore they're selling off. So BRICS and a handful of developing countries are reducing their US dollar intake, respective central banks' reserves. The US prints trillions of US dollar currency and distributes them around the world, importing its inflation to other countries. Developing nations and BRICS countries bear the risk of debt and fund the US deficit by keeping dollar in their reserves. If other nations stop hoarding dollar, the currency will return to America's, leading to a deficit in the homeland. So BRICS, we know, are trying to de-dollarize the US, and they're trying to de-dollarize the world, I should say. And well, what we're seeing right now is, I'm not sure about Australia. I have to have a look at, tried to find some information, couldn't find too much. But even the US allies now are starting to hold less US dollars because They see that if the value of it goes down, well, they've become a poorer country. Imagine Australia had all of its money sitting in US dollars and US dollar crashed. Not only would the US be in a recession, but it would also put a lot of stress on our country as well. So that's what, if countries are starting to sell it up, well, if that's not a sign to me, then I don't really know what is. All right. Now, a billionaire CEO sees a 1 trillion in commercial real estate defaults coming for the market very, very soon over the next 2 years. And basically, this is from the interest rates. Interest rates are not going down. People have been paying so much for their rates. We did a call on this a while ago, and I was explaining how people's credit cards are currently being maxed out because they're using it to pay their mortgages. So we're getting to a point where we might start to see a bit of a price fluctuation in the property market as well, as if a lot of people are unable to pay their offices, which a lot of them are empty right now after COVID, we could start to see a bit of a collapse in the property market. Now, don't quote me on that. I'm not a financial advisor. I'm just reading the data to you. Okay, this is what the data is telling me, but it doesn't look good. Okay. Now, we've spoken about this quite a few times, but I'm going to start bringing it up more. I'm going to start bringing it up more because this is not far away now. Because everybody's set an alert on their phones for March the 10th, March the 8th, coming up to this event. Because if you haven't, do it now. I'll give you guys a second to do it. Do it now, because what we're seeing is basically the Federal Reserve went and printed a whole bunch of money to give it to banks as a lending program to keep them alive, because the banks were in a bit of trouble. But what's happening is that's going to be expiring on March the 11th. There's going to be no more bailouts. So we're seeing that people are unable to pay their debt. We're seeing office buildings and that empty. We're seeing the US dollar being sold off. We're seeing treasuries coming down. Now we're seeing that there could be a banking crisis around the corner. And we won't know much about this until March the 11th. But the Federal Reserve said on Wednesday, this was January 24th, a funding lifeline created for banks last year after the collapse of Silicon Valley Bank threatened to spark wider financial crisis, would close scheduled in March. Okay, so it was called the BTFP. It was really designed in an emergency situation. We want to make sure that banks and creditors of the banks and depositors understand that banks have the liquidity that they need. What happens when people can't afford their mortgage? What happens when money isn't going in the banks? We know that the US looks like they're basically trying to go towards digital dollar. Could this be the pivot that causes that? All right, so keeping our eyes on what's happening. I'm going to be updating you guys on this. But yeah, basically, just make sure that you're aware that this could also be that black swan event that could crash the markets. Banks going broke, bang, big red dick on the candles. What happens to us, guys? We look at buying. Well, me anyway, I'm looking at buying. I just want to share what I'm doing. Can't tell you guys. Let's talk about Bitcoin now. So we know the US dollar is not looking to crash hard. Well, let's talk about Bitcoin. Now, for weeks, we've all been just talking about the Bitcoin ETF. And the fact is, guys, is that's what's driving up prices right now. So I can continuously try and find something else to talk about, but this is what it is. We're going to have a look at some Bitcoin ETF data and why I think we could see the all-time high in the next coming weeks. And I want to go into some altcoins. So first off, we're witnessing total acceleration of Bitcoin ETF inflows. The first 20 days of trading, there was 42K of Bitcoin inflows that was bought up by the ETF. Fast track, the last 4 days of trading, there was 43K. Why is this? One, there's the whole scarceness of what's happening with the US dollar. Two, the Bitcoin price promotes Bitcoin in itself. Every day we wake up, we see Bitcoin up 2-3%. How does that not promote itself? Yeah, other people that are also seeing that, they say, I want to get a piece of the pie. It's basically selling itself. Not only that, one thing to consider is, let's say I owned a company and my company was selling t-shirts. It's probably a pretty shitty example, but we're going to run with it. Let's say t-shirts, right? And I had hired 1,000 new sales staff. They wouldn't know how to sell my t-shirts at the start. They're going to have to learn. They're going to have to contact retailers. They're probably going to have some negotiations for a couple of weeks. And then after a certain amount of time, those contacts that they built up, that they negotiated with, eventually they're going to close those deals and then sell those t-shirts. Same thing is happening here with the institutions trying to sell Bitcoin to its investors. Okay, the institutions are wording them up, but eventually, after the sales staff are trained up, ready to go, what you're going to find is sales are going to be highly accelerated quicker, and the deals that were made at the start of the this first 20 days, they're going to start to close now. The money's going to start to transfer. We're seeing higher inflows. One really, really important thing that we also need to consider is that some of these big institutions that are putting money in, you might call them on a Monday and be like, oh, hey, have you heard of Bitcoin? It's performing X, Y, Z. Do you want to invest in it? They're not just going to be like, yeah, no worries, here's 100 million back. They're going to have to be like, well, I need a couple of weeks. I need to move my money around. Yeah, I need to sell some stuff that's not working for me, move that money, and then get it ready to put it into the ETF. So while the first 20 days, we had all that negotiations happening, we're now seeing higher inflows and a lot quicker. So this tab I opened up by accident, but we're going to go through it anyway because I feel like it's got some data on it. You can see the Bitcoin holdings over time, and you can see that people were selling and offloading their GBTC. But what we can see now is the GBTC has basically come to a level where people aren't selling as much. It's kind of flattened out. And what we're seeing is higher inflows, especially in the grayscale Bitcoin ETF. And we're going to talk about that in a couple of seconds. So the Bitcoin price currently trading at 1.45x the 200-day moving average price. The last time this ratio moved above 1.5 was November 2020. And historically, it's been a good indicator for the start of the bull market. So back in 2020, you can see here, this is where that level was reached. And we can see that started a large run to bull market. And we can see the purple dots. Purple dots here, a dark purple. That's kind of when we're getting into a raging bull market. And you can see that right here, we're not just as dark yet, right? We're still at this color here. So what that's telling us is that we're still quite early. If you're comparing it to these charts here, would be either around here or around here. We've still a whole bunch of upside to go. Thing is about this though, is this run is getting a little bit scary. I'm saying that it's getting scary in a way that usually we see price pump after the Bitcoin halving. But what we're actually seeing right now is price pumping before the Bitcoin halving, and a lot of metrics coming out, which are getting quite scary. So, well, scary, I say scary, I should say exciting, because we're all bulls here, aren't we? Put your hand up if you're a bull. Who's a bear? Anyone in here a bear right now? No? All right, beautiful. Because I'd love to be bearish, but it's just not working out for me right now. Let's have a quick look at this video here.
I'm anticipating that by the time we get to the end of 2025, we're talking 2 years, we're going to see total inflows of more than $150 billion. We're only at 5 right now.
And what is going to propel? That's a big claim. That's a big number. What's going to propel that?
It really isn't all that big when you do the simple arithmetic. Individual investment advisors, independents, those that are operating their own firms, collectively manage around $8 trillion in assets, and 3/4 of them in every industry survey done by DAC-FP as well as by Bitwise all show that 3/4 of advisors say that they're going to allocate to these ETFs, and that their average allocation is going to be about 2.5% of assets. Do the arithmetic. $8 trillion times 77% times 2.5% is $150 billion worth of flows, and that's just independent advisors. It excludes the wirehouses, it excludes the regional broker-dealers, it excludes the institutional investors. Well, I'm anticipating that
$150 billion worth of flows. Now, don't get me wrong, just by looking at what he's saying there, the numbers add up. The numbers to me, they're adding up. And $150 billion worth of flows could send the Bitcoin market quite high. Coming back to what I'm reading here, as long as Bitcoin sees consistent spot inflows, the BTC price will continue to go up. And this is from Ki Young Ju, and he is one of the analysts at CryptoQuant. They're a very insight research focused company where they go very heavy into data. And what we can see that right now, as of the 16th, Grayscale currently own 456,000 Bitcoin. Right now, because this is so fresh, and the reason why I don't think we're going to get a dump in the short term is because all of these ETF holders, right? They're all trying to compete and say we're the biggest. Right now, it's all about who's the biggest ETF for Bitcoin right now, okay? So they're all trying to sell. They're all trying to get the most amount of Bitcoin so that they can be number one. And what you can see from here is that Grayscale is definitely leading the pack, followed by BlackRock and Fidelity. So they're all trying to fight for the top 1% or the top spot. So I don't think that this buying pressure right now is going to slow down anytime soon. 71% of fresh investment flowing into Bitcoin in the last few weeks is coming from ETFs. So this is why we have to keep talking about ETFs essentially. If 71% of the inflows of the total market is from ETFs, well, it's important. Bitcoin crossed the 50K mark, mostly back on fresh demand from the ETFs. 71% of fresh investment flowing into Bitcoin in the last few weeks is coming from the ETFs. And there's a little report here from CryptoQuant, which I can send to you guys. But data shows 9.5 billion of new money has entered the market through ETFs since they were launched on January the 11th. Now, let's take a second and read this. 9.5 billion since January the 11th. And 9.5 billion of inflows. Let's go back to January the 11th. We're going to say over here. From then, we're going to measure it from the bottom because we know we had the big GBTC sell-off, right? $9 million has taken us from 39,000 to 52. How much did that guy just say we're going to get on the previous video? Was it 150 billion? So if every 10 billion is giving us a $10,000 price range, then times that by 15, I don't see $100,000 Bitcoin an unachievable target at all right now. To top it off, remember that as price goes up higher and there's less amounts of Bitcoin on the market, it's being held, price will also go up quicker. So when we're looking at a target, I think 100,000, we should smash that easily. Maybe not within the next week, but something to definitely consider. One really exciting metric, though, is remember when I told you guys that in order for these ETF holders to buy Bitcoin, they're not just going to go log into Binance and press market order and buy it from the exchange. They're going to buy it from the miners. They're going to buy it from the OTC desks. And basically, OTC means it's over the counter. If you want to buy a large amount of Bitcoin, you usually go through the OTC desks first because you get a bigger amount for a fixed rate. You negotiate it with the provider. Thing is, what we're seeing here right now is that the Bitcoin demand excess supply at OTC desks. The demand exceeds the supply. So there's more demand to buy than the current OTC desks have. And that's causing an average bid price much, much higher than what it would originally go for. So some people on the OTC desks are actually paying more than what they're going to pay buying it at market, but they can't buy it at market because if they were to buy little bits, you know how it works with the order book, it would pump the price too high. Does that make sense, everybody? There's just a shitload of demand right now. Like, I don't know how else to say it to you right now. The demand is crazy. I'm looking at all the technical indicators and they're all saying we're overbought and it's just not adding up to me. Another quick video that I want to share here.
So what do you see? What's the future, the near term and the longer term future that you envision for Bitcoin?
Oh my gosh. This thing's going to hundreds of thousands of dollars per coin, Charles. I mean, the US government is in so much debt. The way I think about Bitcoin's price equals technology plus fiat liquidity. So it's going to go up because it's innovative tech and it's better money. But what really shoots it up at a neck-breaking pace is when our government is tens of trillions of dollars in debt and has to roll that debt over. So they got a lot of money to print and financial assets are going to soar. And Bitcoin goes up the most because it's the hardest to make more of. It's over, man. This thing's going to the moon. You know, so interesting, too, because it's not just the U.S. I was just reading today, globally, these countries, these advanced nations and all this fiat currency are going to have to spend $2 trillion on the interest alone, and they won't stop spending, Jack. They just won't stop spending money, and it's coming back to haunt them, and it's coming back to maybe people realizing fiat currency is not the place to be, huh? Charles, this would be my message to America. Give me a second on this one. Guys, the U.S. government's got about $10 trillion over the next 2 years to roll over, refinance. That's debt. Our country's in debt. It's a huge problem. They got three options. One, they could pay it back. It's not a real option because we don't got the money. We're broke. Two, our government could come out, Charles, and say, you know what, guys, we screwed up. After World War II, we changed the way money worked. We got off the gold standard. We issued debt all over the place. We got way too cocky. And actually, all of our banks don't have your money. They're insolvent. All the airlines you fly and travel on aren't actually good businesses that should be in business. Healthcare shouldn't actually be free. We screwed up. We piled on so much debt and screwed up the younger generation, and we're in huge trouble. So we're going to have to let everything fail and reset this country. Now, they're not going to do that, are they, Charles? They have third option, which is unique to the government. They could print the money that they're missing. And when they print the money that they're missing, they're stealing from all the people that hold US dollars. And so what they'll do, they'll have to do is print dollars. And the only way to save yourself is own not dollars. And that's when you see things like the S&P 500 and gold and Bitcoin soar. And so that's what's going to happen over the next 2 years. They got to print 3 times more than they did during COVID.
I love your enthusiasm, Jack. We're going to bring you back.
Basically what I was just saying. And it's just confirmed it on a TV show. They're saying the same thing. The US is in so much debt. What are their options? Either they're going to turn around and say they stuffed up, or they're going to print. And either way, it's a bullish scenario for Bitcoin. So this year's going to be bloody exciting. Now, remember, the total net inflows are now over 100,000 Bitcoin. We can see that every day, more and more money is coming in from this inflow. So one thing to take note of, though, is here on CoinGlass, you can see how many people are long, how many people are short. And one thing that I really like to look at are the asset managers. And you can see that the asset managers are all long. Actually, none of them have a short on right now. They are all long. We are seeing that there is some shorts on the CME, which is where all the institutions are trading. You can see that right now, shorts are currently piling up. There's more shorts on than there is longs. But this is the data this is lagging data from about 6 days ago. So can't go off this too much because it's not exactly accurate as of today. But some people are starting to think we may go in for a short. Now, I want to bring your attention to the liquidation heat map. This is important. Who's watched the chart sometimes, and when prices hit a certain level, the prices just jump like $1,000, and it happens with like an instant. Who's seen that happen? Dave, you've seen it yet? iPhone, you've seen it, Sam? Your iPhone today. Luke Dolly, you've seen it. Yeah, I want to explain what that is and why that happens. So essentially what will happen here is people have placed short contracts, and they have placed, well, that's their liquidation for their short contracts. And if we have a look at the amount of shorts there is there, you can see that here it says 1.23 million. If I change it to the weekly, 600 million, another, say, 300 million if you combine those two, and more. So it's probably getting close to about $1 billion worth of shorts that will get liquidated. What this means is that if price comes up and hits this level, and all of these people get liquidated, there will be $1 billion worth of buying pressure, because remember that when a short gets liquidated, that contract basically, they have to basically buy a long position to close that short. Everyone understand what I'm saying? You got a long position, but you have to buy back those contracts to close that position. So if a liquidation gets triggered, what we might see tonight, or we might see over the next couple of days, is if we do break this level, previous high, we might see a big candle that just goes straight up, because there's going to be $1 billion worth of buying pressure just forced into the market. And we've pretty much got no say on that, unless they decide to change their liquidation, which could also happen. Remember that this is updated periodically as well, and it could change any minute. But yeah, you can see here there's $1.2 billion worth of shorts just waiting to get liquidated. So last thing about the ETF inflow, and we're going to start talking about some alts. You can see here there's a chart, and I've seen in Empire chat today, everyone was saying that Monday is usually a quiet day. If we go back, we have a look. Monday actually isn't too bad. What we find is that Fridays are usually the quiet days. So you can see some of the lowest amounts were on Fridays, but Mondays have been pretty good. So keep our eyes on the market tonight, what's going to come through. We might see some flows coming in tonight. Now, I want to start looking at some altcoins. We've got to get you guys positioned well, and I'm going to do my best to show you what I'm looking at, what narratives I'm following, because whilst there's money to be made with Bitcoin, as Bitcoin goes up, so does the altcoins, and we want to get ready for it. First off, this is pretty irrelevant, but I want to share it anyway because it's pretty cool. But Ferrari has now started accepting Dogecoin as payment for their cars in the US. Why did Ferrari want to load up on Dogecoin? So let's have a look at the charts again. Let me bring up the chart. And let's have a look at Doge. Now, I'm currently in a position in Doge. What you're going to find is that if we go back and we have a look at a lot of the charts, a lot of the coins that have pumped, they have all had this very, very big consolidation period. The longer the consolidation period, the higher percentage of a pump that could follow. So ideally, you'd want to get in at the bottom of the consolidation and then run it to wherever the price goes. I've entered a position with a bit of FOMO and probably a spot that I shouldn't have, but I'm bullish on Doge because I know that Twitter is announcing a all-in-one payment system that they're trying to push, basically like what they have in China with can't remember the name of it now. It's like a messaging app like WhatsApp, but you can make all your payments through it. WeChat. Twitter is trying to do that, and don't get me wrong. When Elon launches this, who do you think? What coin do you think they're going to buy first? I want to see what you guys think. I'm just seeing the chat. I want to see what you guys think. If Elon Musk turns around and says his payment process is live, Luke Dolly hit the nail on the head. Doge, all right? The Doge army on Twitter is huge. They're all over it. Elon holds, I'm pretty sure, holds some of it still. I'm watching Doge. And I like these really, really long consolidation periods. You can go back and back test it. Have a look at a whole bunch of alts that have had these really long consolidation periods and have a look at the breakouts that have occurred from them after they've broken out. That's not to say it's going to break out now, but know that when this does go, we could see quite a large breakout. Now we
last time he mentioned Doge on Twitter, I think it pumped, was it 60 or 100% or something stupid, or 300% when that big thing was. He mentioned it, said something about Dodge, and then it went to the moon pretty much. So
that's it. All he had to do was mention it. I remember once he changed his profile picture to it. So we know he's bullish on Doge. We know that he's part of the Doge army, and the whole Twitter news kind of lines up perfectly with it. Now, one new sector that's coming into the crypto market at the moment is DePIN. Okay, decentralized physical infrastructure networks, and that's oops, what have I done here? And that is basically when you're hiring your computing power, whether it be your hard drive, you're renting it to the network, whether it be your graphics card, you're renting that to the network, and basically allowing for decentralized physical infrastructure. So actual hardware, you're basically renting, right? And we can see that there's been a bit of growth in the DePIN sector. There's one coin called Filecoin. I'm pretty sure the majority of you have heard of this one before, that I have my eyes on. So I want to show you guys the chart of Filecoin. And look at the size of that ranging consolidation. Similar to Doge. Now, Filecoin, look, if we can get lucky and we can get some orders in down below at the support, I'll be laughing. If not, I'll be looking for entries on the smaller time frame. Remember, I'll get Maddie to chart this one for you all tomorrow because I'm more the fundamentals guy. But if we have a look at if it breaks out from here, nearest resistance in the daily is $17. It's almost a 3x from where we are now. So imagine leverage trading that on a 20 times multiplier. You get the 300% from here to here. Times that by 20, you've done a 60x. $1,000 on that, boom, 60 G's. Take it out, happy to go buy yourself a new car. No, probably don't, but that's just the possibility of what could happen. There's no resistance there. There's no technical levels until we get to here. Thing is if we were to enter now, oh, there you go. Sorry, it's 166%, a bit less. If we were to enter now, problem is we're going to have a very large stop loss. You can see up to about potentially 71% stop loss. So the safer option is to obviously getting a little bit lower. But the thing is we've touched it multiple times. Looks like we came down for one more touch, but we just haven't been able to reach it. One coin to keep your eyes on, guys, Filecoin. I'm not telling you to buy that right now, okay? But you guys all have done our course. You all know how to do technical analysis, keeping your eyes on Filecoin, okay? One thing that's been happening at the moment, actually, go back to here, sorry. Filecoin is my top 3 decentralized data storage play with 3 major growth verticals. Storage is 2.8 times. Filecoin virtual machine has $254 million locked in it, and projects building on top of Filecoin has some of the cheapest fees across the entire storage sector. So know there's a lot of different coins that basically offer cloud storage. There's Arweave, there is Filecoin. But what we can see from right now is Filecoin is actually the cheapest and their storage is growing exponentially, meaning more and more people are getting involved in the network. And I had another thing here. Where is it? I'll have to come back to it in a sec. But it is a sector that we definitely want to be keeping our eyes on. One AI, and now we'll talk about AI. Because today, it didn't matter which AI coin you held, they all threw a leg up. Every single one of them. Render, I've been telling you guys about that for ages. AGIX, Fetch, they all pumped today, stupid amounts. Anybody make some money on them? No one. Like Lukey did, Luke Dolly did, good man. Adam Cook, yeah, sweet. Good. That's what I like to see.
R&DR.
Render.
Yeah.
If we have a look here, I've given you guys a complete list of all the altcoins that I'm watching. Okay, if you have a look here, you can see they're sorted by narratives. So real world assets aren't really performing today. Gaming tokens not doing too much today. ETH tokens aren't really doing too much today either. And if you come down and you look at AI, look at that. It is a complete sea of green with 4.3% being the lowest. AGIX up 21%, GRT up 9.414%. AI coins right now are pumping. And that's something that we want to be keeping our eyes on, looking for some potential opportunities. We want to follow the narratives, okay, of each one as they go by. If you look at GRT, this is a perfect example of another ranging market where we've had this big sideways consolidation. We got the breakout, and just today alone, we're seeing a 8.7% gain. From the level of support, we're up 45%. That's huge. That is huge. So expect that when you see these large consolidating patterns on some of the platform or some of the coins that are doing real things and have real hype behind them, they're not just your average old shit coins, you're going to see potential move across the board. Render also breaking out. Now, I want everyone to take note of Render. Render is a new coin. And what you're going to find is that when a new coin breaks its all-time high, it goes into a level that we call price discovery. When we're in price discovery, there's nothing to do TA. It's basically, where are we going next? The only way that you can chart this is by using your trend-based fibs and your Fibonacci levels. You go from the top to the bottom, and you can use these levels to predict some certain selling areas. Usually the 1.168 is a decent spot to take a look at. And you can see that if we can continue up from here, then we're on $9. That doesn't look like a bad target at all. Thing is can I buy this right now? As a technical trader, I'm looking at it, I'm seeing everything overboard. So I'm finding it risky to look at entries right now. I want to keep this on my watch list. Everyone write down Render, because I think it's going to be one of the big movers of this year. And, you know, try and find some entries when price comes down. This is the thing. Prices are going to go up, and that's good. What we're going to find is, guys, as traders, if we're not taking notes, if we're not writing stuff down, when prices come down and you're looking for coins to buy, you're going to completely disregard all these coins that I've told you because you've forgotten about them. Because they're pumped today, and then they might come down. They might not hit another low that you want to buy at until a month's time. 30 days time, are you going to remember Render? But if you're writing them down, you're putting them on your desk, like Luke Dolly is. You know, I got to give it to Luke Dolly, man. This guy, look at him, he's got his book there. You know, he's put in a lot of work. He's on every call, taking notes. And the bloke's killing it. Be more like, well, just follow what he's doing, guys. Take notes, do everything that you can. Generative AI is predicted to become a $1.3 trillion market by 2032. So AI tokens are going to be big this year. I've told you guys, real world asset tokens, AI tokens, gaming tokens. That's the hype at the moment. And DPIN. They're the hype at the moment. They're the coins that we need to be looking at. I put some stuff here in Empire for you guys, and we know that in a trending bull market, announcements are things that are going to fuel buying pressure. One of them that we're going to see right now is Ethereum is going to have a Denkan upgrade in 24 days to 23 days from now. That's one to keep an eye on. Keep your eyes on Ethereum. And this is in the near term. Okay, so we're looking at this week. Maybe if you've got your piece of paper, you know, maybe you can grab another piece of paper and put this week's coins to look at. Okay. Ethereum. Blur is also going to make a big announcement next week. Blur has shown a lot of strength lately. Blast confirmed an airdrop for Blur stakers. If you're staking Blur, you're going to get a Blast airdrop, and basically that's going to cause people to be buying Blur to stake it, therefore taking supply off the exchanges. Matic is another one. They're going to have their mainnet launch on the 23rd of Feb. Thing is though now is that's probably going to be priced in. Yeah, it's too soon now. It's too soon. And then we have Say. Say's highly anticipated V2 upgrade has launched on public DevNet. We're waiting for the Say mainnet launch. That's going to be a very big announcement, the mainnet launch. Okay, so it's one we really want to keep our eyes on. And I'm going to be positioning myself in a good trade for Say coming up to that. One thing that thoughts on SKL as it relates to ETH. I'll have to have a look at it for you, my man, because I haven't had a good look at that just yet. Tom, I bought Render at $3.50 long-term hold. Good man. So looking at Say, this was where price started. And I want to compare this to Render. Because both of them started, they got listed. Let's change it to the daily. Price started. It went down for its accumulation. You see that it's accumulating here as well on this chart, the Render. Then it went parabolic and went on its all-time high. Now, using the trend-based fibs, we go from the bottom to the top of that move. This actually pumped above the 1.618 and went all the way to the 2.618. It was a very big push there. Price is now coming down. You can see that it's starting to, basically, the push isn't as much. If you're looking at it in Elliott 5 waves, I'd like to say we're going for a correction. But given the fact, the fundamentals of it, I don't know when we're going to get a correction just yet. It's hard to say when every day $500 million is coming into the market. Yeah, very, very hard to pick the top. But one thing that we can do is look at other AI tokens that haven't yet moved. Now, who remembers when I spoke about Cubic? Who also remembers Matty Stella giving me some shit about it? He's like, this altcoin, it's not doing nothing. I'm going to sell it. A lot of the coins I'm going to show you guys now are low cap coins, coins that are still in development. This coin in particular had like the most dodgiest looking website in the world. Right? It was, yeah, he sold his. I know he stuffed up because I'm up 100% now. You see it today, he hit 715. I'm pretty sure I told you guys this at about 340. So it's just a bit over 100%. Thing is about this is it's still very new. It's still not listed on any exchanges. It's just listed on that dodgy trade ogre one. So this still has a lot of potential. It was trending on Twitter today. If you were to look at buying something like this, I would recommend only putting in a very small amount of money, a couple of $100. That's all I've done because it is very high risk, this kind of a coin. And you know what? As we start to see it get a listing on exchanges, we could see a bit more of a push to it. It is in the AI field. And what I like about it is it's actually a proof of work layer 1 blockchain. So it's a whole blockchain being built based on AI. When this thing gets discovered, I think this could have quite a lot of positive feedback to it, right? And I think it could be something that could go for quite a large pump. Not to say that it will, yeah, remember that it's always risky, especially when you're dabbling with altcoins like this. A lot of crypto projects in the space are going to claim they're doing X, Y, Z, and half of them end up doing none of it. So just keeping your eyes on this. They're building a whole AI algorithm on top of Cubic that gets information from hundreds of thousands of Cubic miners, creating billions of artificial neurons. And you can see here that it's open source. The website now doesn't look as dodgy, actually looks pretty normal. And they're closing in on 40,000 followers on Twitter. So they are starting to get a bit more exposure, and the price is reflecting that. As soon as AI started to pump today, you can see from 398 3 days ago, we've gone all the way up to now 698. So it's doing quite well. Corey, what are you showing me in the chat here? Bitcoin, we'll have a look at that again in a second. Another coin that we need to see price discovery on is Aptos. So Aptos is another layer 1. It's new. It's backed by, done work with Microsoft and a whole bunch of other large companies, but it just hasn't hit that price discovery at the same time as Sui has. Now, what have I done here? It was launched at a very similar time as Sui. So this is one that I'm going to be keeping my eyes on. PT, USDT. And I've got it listed on my list here somewhere. I'm pretty sure it's in layer ones. It's not. I'm going to have to add it in them. Okay, and I'll make sure that is in the folder for you guys. But Aptos yet, it hasn't run. It hasn't done these big explosive gains that C has. And we're going to find is if that a good quality project gets launched, of course, after the launch, it's going to have a pullback. That's normal. So did Jupiter. So did most coins. They get a pullback. But coming into the bull market, remember that with the new coins, people don't know what the fair value for that new coin is yet. So when it does get hype and it pushes through the top, it'll go into that uncharted territories again. That's when you find price does that big parabolic run. How many coins have you seen? If I go into CoinGecko now and just pick, I don't know, Uniswap, right? As an example. This is the run that you want to catch. This is the run where you go from $2.20 to $42. That is the run that you want to be a part of. And Aptos hasn't done that run. If you go back and have a look at a majority of coins, I don't know, IMX, just picking random ones here. You're probably going to find this is done. This one hasn't yet been on a big run yet either. This is when it launched, it dumped. IMX, another one to keep your eyes on. I don't know what else we got here. Quant, this is a pretty popular one. Bang. So you really want to be here for those big runs. But what you find is that with most coins, when they're new, they get that run. But after that run, not many of them will reclaim that level again. Because as it launched, people didn't know what the tech was about. Everyone started talking about it. It just got hyped really, really much. And it just became like a bubble, essentially. So many people bought, then bang, bubble popped, comes down, and finds its fair value. And unless it's really doing something that's changing the world, you find that a lot of them don't go back to that new high. Even when it comes to the next bull market, some of them do, some of them don't. The coins that you want to really position yourself in for this upcoming bull market are going to be the fresh new coins. They're going to give you the highest probability, sorry, the highest, not probability because they're more risky, but they could give you the highest returns. Now, this is one that, yeah, Render, that's right, Adam. This is one that just launched recently. This is called Palm. And I like this coin because it has a very low supply. It's also in the AI field. And they have burnt 20% of the supply. As top of that, 56.13% of the circulating supply is currently locked up. What I like about Palm is it's also not on any exchanges just yet. You can only buy this from Uniswap. This does mean that it does have a lot of risk involved, okay? But remember that no risk, no reward sometimes, guys. We need to be looking at some of these. These are the altcoins that, you know, I like to look at because if I want to get 100x return, I want to find altcoins at a very low market cap. If we're having a look at this one in particular, the market cap is only 21 million. Go and compare that to some of the other top AI coins that we've got. And some of them are in either 500 million plus, some of them are in the billions. Now, this may not ever go there, but when it comes to me, what I like to do is I like to put $100 on just a couple of them. I count that $100 as gone. Yeah, spare $100, whatever it is. Throw it at them. If they pop, they pop. If they don't, they don't. And I might do that for 30 projects. And out of the 30 projects, I might get 8 of them that do a massive return. It's paid off what I've put in, plus made me a good profit. Sometimes I'll lose it all. Yeah, if I lose a couple of grand, but I've had a dabble, it is what it is. That's the crypto market, guys. Sometimes maybe good, sometimes maybe shit. But knowing that we're in the AI field, all right, that's what we want to be keeping our eyes on, AI at the moment. Here's a good comparison of Injective and Render. You can see that they're kind of following a very, very similar suit. Some people are predicting to Render to hit up to $15 based off what happened with Injective. Will it happen? I'm not sure, but remember what I told you guys. Fresh coin, never seen its massive pump. This is what you could expect. All right, it's happened with Injective. We could see it happen on Render. But you're going to find a lot of the coins like, what's it called, Ripple or XLM that have been around for a very long time. A lot of them aren't going to give you this kind of return because they've been around, the price is factored in. Whatever partnerships they're doing what they're doing. Yeah, they're an established company, essentially. When they're not established, that's when you're getting all the partnership announcements, all the mainnet upgrades, all the this and that, all the good fundamentals are coming out for them. So keeping your eyes on Render. So Palm, they have burnt another 500,000 of them, and 20% of the supply for Palm has been burnt. Last thing that I'm going to show you guys, prepare yourself for altcoins. We're going to have a look at this in a bit more detail. So what this chart is telling us, the golden cross for altcoins in the 2-week chart is very, very close. And this is something that's only happened every 4 years, which is basically tied in with the halving cycles. Every time we have had this golden cross, you see the purple crossing over the black, we have seen a massive run in altcoins. And right now, we're getting to the point where we're about to see that cross once again. Now, going back to the chart, I last week went over the total 3 chart with you guys. And what I said to you was we're in this ranging market. See, once again, these all ranged. We broke out. And if we broke out the top here, we could start to see a big push on altcoins. From where we are right now, we go back and have a look at what happened last time. Here was the sideways consolidation. Here was price consolidating and confirming that level of resistance as support. Let's compare it to what we have now. We've had a sideways consolidation, price broke out, confirmed as support, and what we're starting to see is price coming up. The only difference is, and this is the part that's throwing me off quite heavily, is if you have a look here, when this happened, I'm going to bring it down to the daily time frame so we can see it better. If you have a look in this market, before price started to take off, it reset. Where was it? Might not have been on the screenshot. I have to open up the Empire one. You see that the RSI levels on the daily reset, as well as the stochastic levels reset. If you compare to what we have now, we're at an overbought level as we're breaking out. Problem with that is that usually when things are overbought, we want to see that retrace before we get that next leg up, allowing the alts to have that breather. Now that's on a normal market, but that doesn't basically give you an estimate, because this time round, the markets are different. Last 2-3 bull markets that we saw, we didn't have $500 million coming in every day. We didn't have ETFs. We didn't have the institutions in the market. So what we're seeing now is going to be completely different. And there is a chance that from where we are now, based off what we're seeing here, that if we do get a bit of a pullback, great, use that. I'll be using that as an opportunity to buy and load up. But I want to have a small amount of exposure to the markets now. And then if price does come down, allow me to buy more. When I say a small amount of exposure, I'm looking for positions. I'm not going to go put 100 grand on a long, but I might put smaller amount of my portfolio that I could risk losing and allow for me to get into some of the entries that I want. So I might have a long on, I might not get the entry straight away, but by doing that, it eliminates the FOMO, right? If you have a small amount, you're making a bit of money, great. Thing is in this market, we may just not get that pullback that we all want. Because if so much money is going in, who knows what's going to be next? You know, if you're looking at all the technical indicators, we should have had a pullback a very long time ago. And technically, if we're looking at the charts right now, we're at the top of what could be the 5th leg. Looking at Elliott waves, we had our first initial push, came down, went for the 2nd leg, topped out of the 3rd, gave us a pullback for the 4th leg, and now we come back up. And this is usually what we call the sucker's rally. Now, the way I'm going to be gauging my altcoins, I'm going to delete this again for a sec, and just draw this back in here. If I get a breakout, of this level here, we start to head up, and you'll find that this usually happens within the US market. For me, that's an indicator we may not get a pullback. Probably going to go to 55K. If all those liquidations occur from the longs, 1.2 billion or whatever it was, has to be bought from the stop losses, it's going to cause a nice green candle. It could be a blow off top, it could be a sucker's rally, but we have to wait and see what happens then. Am I saying we're going to go up? Potentially. All the fundamentals are telling us we're going to go up. It's the technicals that are against us. But in this market, we need to be focused on the fundamentals because the fundamentals drive the technicals. So keeping our eyes on that. And remember that if we do come back down here, we start to head back down, and that could give us that last buying opportunity that we're looking for. We have to play it as it happens. Don't worry too much about trading the noise. Look for your key levels. For me, I'm looking for longs here, and I'm not shorting. I'm not shorting anything. I don't want to touch a short. I just want to wait for dumps to have positions to come down, and I want to buy. I want to buy as much as I can. All right, guys. Hope you all enjoyed today's call. Any questions or anything before we can wrap it up? Adam Cook, any chance this pops off before we complete the mixed mentorship? It might. I was hoping it wasn't gonna, but we're getting a very early bull market. One thing that I can show you here on the Nostradamus chart that I created a while back, still love the name, that usually the run starts when we get into the green zone. But at this rate, we've almost beaten the all-time high. If you have a look here, it took, to beat the all-time high, we were halfway into the bull market of the halving to beat the previous all-time high. We haven't even reached the halving and we're almost beating the all-time high, if we're not far off. And if these inflows continue, I've been watching it around 1 a.m. to 2 a.m. Melbourne time, about 9 a.m. to 10 a.m. New York time. If they continue, we may hit that all-time high within the next week or two. We're not far off. We're like, what, 50% off. The only thing going against us right now is the technical indicators. Are they going to start to take some profits? I read somewhere that 91% of all Bitcoin holders right now are in profit. So will the institutions shake us out? Will there be some FUD? Remember, there's the bank thing that's going to be happening in March. Remember the US dollar, could that be that black swan event that's going to take us down? But until we see more about that, for me, I'm looking for longs. That doesn't mean buy, but that don't FOMO into stupid areas. You know, obviously, it's hard. Who's been getting FOMO? Let me see a show of hands. I'm not going to lie, I've got a bit. I'll be honest with you. It happens, yeah. It's a human psychology. I did get a bit of FOMO sometimes. I've made a couple of pretty bad decisions. But anyway, we're so early in the bull market, it doesn't matter. We can fix that and turn that around. But be responsible with your trading. All right. Use the momentum indicator that I showed you guys. Use the stochastic to look for your entries. But at the same time, don't go buying tops thinking that you're going to keep going up, because yeah, you might, but your risk is much, much higher. I don't think it's less likely that we're going to get a pullback. You see, Andrew, you can vouch for this on our copy trading account. I did a copy trading account for a couple of the guys in Empire that hit 600 Empire points. And looking at the market, we saw, we just did a little test, like a beta test before I launched it out to everybody. And, we saw that the market was just telling us that it looked like it wanted to reject. It looked like it wanted to pull back. I'm just sharing my screen. The problem was even though every single technical said it wanted to pull back, the fundamentals were just too strong. So when that happens, your technicals aren't going to work. And until the market kind of stabilizes, just be careful in your trades and don't go too deep. Kind of use a strategy where I've personally been using a strategy where I'll dollar cost in. I'll buy a little bit. If it goes lower, I'll increase my bag size. All right, guys. Thanks everybody for jumping on. I'll stop the recording. If any of you have any questions, we can go into it.